Yeah, I mean, Malawi has some very interesting trends, but it also shows an issue I think that's quite common in Africa. When you have one particularly large mining project, in Malawi's case, a uranium mining project coming on stream in 1 year, it can have quite a big impact on growth. So we're seeing that, for example, also in Ghana this year, where for next year, 2011, where we're going to see a similar, the advent of oil production driving up growth again to very high levels. Ghana will probably be one of the fastest growing economies in Africa this year. The IMF estimates it'll be 11% next year. So it's quite typical, but Malawi then also has this secondary story underneath it, which has been the case in a number of southern African countries, whereby the government has been very effective in providing aid, fertilizers and seeds to small-scale farmers, which have kept agricultural sector growth coming. But in Malawi's case, there are cost implications of that, and those are now having to be addressed, which means it's having to slightly scale back some of those inputs that it has been providing in recent years.
David, let's touch on the debt scenario that is playing out on the African continent and some of the deficit numbers that we've seen. Of course, we know that some African countries are far more fiscally prudent, in a better position fiscally than the developed world. And this is what is making these countries so attractive to a lot of the investors. Which countries do you think is going to start outperforming on the African continent? Some say that it's definitely going to be in the oil industry and the countries that are exporting oil products.
Yeah, I mean, we're looking at Africa, and yes, the oil sector is doing very well. Obviously, the recovery in oil prices means that the 7 African oil producers are all looking at relatively healthy growth rates. But as we've argued, I think, consistently, Africa is more than just a commodity story, and the structural factors are also driving a good pickup in growth in some regions. So yes, West Africa, the Gulf of Guinea is one hotspot, but just as much we see East Africa as a hotspot as countries in East Africa move towards greater economic integration. There's a lot of trade going on there. Against the background of, yes, some commodities, obviously Uganda might become an oil producer, and we're seeing gold production rise in somewhere like Tanzania. But it's the market underneath. If you put together the East African market, it's a market of 100 million to perhaps even more if countries like DRC and Zambia were to be looped in that sort of East African section. So that compares very favorably with a market like Nigeria of 150 million people. So yes, oil, commodities are all doing well. That's giving a big impetus to African growth, but there's much more underneath it than that at the moment.
Well, David, just looking at the notion of where the African balance sheets are in a far better position than some of the developed world, what is your view on that?
Generally, yes. I mean, African countries, if you look at their debt stock, they are significantly lower. There's a few exceptions. Perhaps the rise in the debt stock in somewhere like Kenya is a concern. That's heading up to 50% of GDP. But when you look at levels in Europe, where they're over 100% of GDP, the total social, obviously levels in Africa are very low. A whole number of African countries obviously benefited significantly from the debt write-offs that happened in 2006, 2007, and perhaps some more countries will continue to do that. Côte d'Ivoire may well benefit from it, and potentially if Zimbabwe can sort out its politics, Zimbabwe could benefit from it. But I think what's interesting in the African context is debt stocks are low, and we would actually encourage African countries to start borrowing again. I mean, the biggest constraint to growth in most African countries at the moment is infrastructure. But what we are very keen on thinking about, or getting African governments to think about, is that they shouldn't just rush out and borrow hither and thither. They need to get a detailed plan of what they're going to borrow, what projects they're going to finance, the different sources of financing that they can access, whether that's issuing euro bonds along the line that Ghana's done, that Zambia may be doing, or Tanzania may be doing, whether they borrow from the existing multilateral donors, or even if they borrow money from China and Brazil, the new emerging powers in the world. So they have to sit down carefully and balance off all the costs and benefits of these sources, of lenders, and the rates of interest they charge and the conditions they attach against the range of infrastructure projects that they all know that they have to push ahead with if they really want growth to pick up to levels that will really make a sustained impact on poverty.